Achieving an 800 credit score is a goal for many individuals, as it opens the door to the best interest rates, loan approvals, and financial opportunities. While improving your credit score can take time, there are strategies you can employ to speed up the process. This article will guide you through the essential steps to get an 800 credit score fast. Understanding your credit score. Before diving into the steps to improve your credit score, it's crucial to understand how credit scores are calculated. The most commonly used credit scoring model is the FICO score, which ranges from 300 to 850. Here's a breakdown of the factors that affect your FICO score. 1. Payment history, 35%, your record of on-time payments on credit accounts. 2. Amounts owed, 30%, the total amount of debt you owe and the proportion of credit used to available credit. 3. Length of credit history, 15%, the average age of your credit accounts. 4. Credit mix, 10%, the variety of credit accounts you have, such as credit cards, mortgages, and auto loans. 5. New credit, 10%, the number of recently opened accounts and hard inquiries. Understanding these factors helps you identify where you need to focus your efforts to improve your score quickly. Step 1. Check your credit report for errors. The first step in improving your credit score is to check your credit report for errors. According to the Federal Trade Commission, 1 in 5 Americans has an error on their credit report. These errors can negatively impact your score, so it's essential to review your reports from all 3 major credit bureaus: Experian, Equifax, and TransUnion. How to get your credit reports. You can obtain a free copy of your credit report from each bureau once a year at annualcreditreport.com. Carefully review each report for inaccuracies, such as 1. Incorrect personal information. 2. Accounts that do not belong to you. 3. Incorrect account statuses, e.g., reported as late when they were paid on time. 4. Duplicate accounts. 5. Incorrect balances or credit limits. Disputing errors. If you find any errors, you should dispute them immediately. Each credit bureau has an online dispute process. Provide any documentation that supports your claim, and the bureau must investigate within 30 days. Step 2. Pay your bills on time. Since payment history makes up 35% of your credit score, paying your bills on time is the most crucial step you can take to improve your score quickly. Late payments can significantly harm your score, especially if they are recent. Tips for on-time payments. 1. Set up automatic payments. Most banks and credit card companies offer the option to set up automatic payments. 1. This ensures your bills are paid on time each month. 2. Create payment reminders. Use your phone's calendar or an app to remind you of upcoming due dates. 3. Prioritize payments. If you're struggling to pay all your bills, prioritize the ones that report to the credit bureaus, such as credit cards, mortgages, and auto loans. Step 3. Reduce your credit card balances. The amount of debt you owe, particularly on credit cards, is the second most significant factor in your credit score, accounting for 30%. Reducing your credit card balances can quickly boost your score. Understanding credit utilization. Credit utilization is the ratio of your credit card balances to your credit limits. It's recommended to keep this ratio below 30%, but for the best scores, aim for under 10%. Strategies to reduce credit utilization. 1. Pay down balances. Focus on paying down your credit card balances as much as possible. 2. Request a credit limit increase. If you have a good payment history with your credit card issuer, ask for a credit limit increase. 2. This can lower your credit utilization ratio instantly. 3. Avoid closing old accounts. Even if you pay off a credit card, keep the account open. 3. Closing accounts can reduce your available credit and hurt your credit utilization ratio. 4. Pay multiple times a month. If possible, make multiple payments throughout the month to keep your balances low. Step 4. Become an authorized user. One effective way to boost your credit score quickly is to become an authorized user on someone else's credit card account. As an authorized user, the primary cardholder's positive payment history and credit utilization can benefit your credit score. How to become an authorized user. 1. Choose the right person. The primary cardholder should have a long history of on-time payments and low credit utilization. 2. Ask for permission. Discuss your plan with the primary cardholder and explain how being an authorized user can help you. 3. Monitor the account. Ensure that the primary cardholder continues to manage the account responsibly, as any negative activity can affect your score. Step 5. Use a secured credit card. If you have limited or poor credit history, using a secured credit card can help you build or rebuild your credit. A secured credit card requires a cash deposit as collateral, which typically becomes your credit limit. Benefits of a secured credit card. 1. Credit building. Secured credit cards report to the credit bureaus, helping you build a positive payment history. 2. Low risk. Since the credit limit is based on your deposit, there's less risk of accumulating unmanageable debt. 3. Graduation. Many secured credit card issuers offer the opportunity to graduate to an unsecured card after a period of responsible use. How to use a secured credit card. 1. Make small purchases. Use the card for small, manageable purchases that you can pay off in full each month. 2. Pay on time. Always pay your bill on time to build a positive payment history. 3. Monitor your credit. Keep track of your credit score to see how your secured card is impacting it. Step 6. Limit hard inquiries. Every time you apply for credit, a hard inquiry is recorded on your credit report. Too many hard inquiries in a short period can negatively affect your score. Each inquiry can lower your score by a few points and stays on your report for 2 years. How to limit hard inquiries. 1. Plan applications wisely. Only apply for credit when necessary and space out your applications. 2. Pre-qualification. Some lenders offer pre-qualification, which uses a soft inquiry that doesn't affect your credit score. 3. Rate shopping. When shopping for a mortgage, auto loan, or student loan, multiple inquiries within a short window, usually 14-45 days, are typically counted as a single inquiry by the FICO scoring model. Step 7. Diversify your credit mix. Having a mix of different types of credit accounts, credit cards, installment loans, mortgages, etc., can positively impact your credit score. This factor accounts for 10% of your score. How to diversify your credit mix. 1. Add a small installment loan. If you only have credit cards, consider adding a small installment loan, such as a personal loan or an auto loan, to diversify your credit mix. 2. Manage existing accounts. If you already have a variety of credit accounts, focus on managing them responsibly rather than opening new accounts solely for diversity. Step 8. Keep old accounts open. The length of your credit history accounts for 15% of your credit score. Keeping old accounts open, even if you don't use them frequently, can positively impact your score by increasing the average age of your accounts. Why length of credit history matters. 1. Longer history shows stability. A longer credit history indicates that you have been managing credit responsibly for a longer period. 2. Old accounts contribute to average age. Closing old accounts can reduce the average age of your credit accounts, which can negatively impact your score. Step 9. Regularly monitor your credit. Monitoring your credit regularly allows you to stay on top of your credit health, catch errors early, and track your progress. How to monitor your credit. 1. Use credit monitoring services. Many services offer free credit monitoring, providing alerts for changes in your credit report. 2. Check your credit score. Regularly check your credit score through free services provided by credit card companies or other financial institutions. 3. Review your credit reports. Periodically review your credit reports from all 3 bureaus to ensure accuracy. Step 10. Get professional help if needed. If you're struggling to improve your credit score on your own, consider seeking help from a credit counseling service or a financial advisor. These professionals can provide personalized advice and strategies tailored to your financial situation. How to choose a credit counselor. 1. Look for nonprofit organizations. Many reputable credit counseling services are nonprofit organizations. 2. Check credentials. Ensure the counselor is certified by a recognized organization, such as the National Foundation for Credit Counseling, NFCC. 3. Research reviews. Look for reviews and testimonials from past clients to gauge the effectiveness and reliability of the service. Achieving an 800 credit score fast is a challenging but attainable goal. By understanding how credit scores are calculated and implementing the strategies outlined in this article, you can significantly improve your credit score. Remember that consistency and responsible credit management are key to maintaining a high credit score. Monitor your progress regularly, and don't hesitate to seek professional help if needed. With dedication and effort, you can reach your goal of an 800 credit score and enjoy the financial benefits that come with it. Now that you're equipped with the knowledge to boost your credit score, it's time to take action. Start by checking your credit reports for errors and paying down your credit card balances. Implement the strategies discussed in this article and watch your credit score climb. Don't forget to subscribe to our channel for more tips on financial success and share your progress with us in the comments below. Let's achieve those credit goals together.